I think when we talk about trade policy, as you highlighted already, China, and China is a bipartisan issue. No matter who it is that's going to be in the White House next, is going to continue a hard line on China. I think this is due to quite a lot of momentum already being built and positive support by the U.S. public. If you look at wider trade issues, the UK and US are also looking at completing a FTA, a free trade agreement, particularly important considering the Brexit negotiations that are also ongoing at the moment. And it is absolutely #1 priority for the UK. The question is that going to get more momentum under a Trump 2.0 presidency or a Biden presidency? I do think that the focus will be on domestic for the very early term, particularly in comparison to what's going on with COVID. But international trade has always been a mainstay of the U.S., so I can't imagine it taking a backseat for long.
There's no doubt that inequity in trade policy is a huge focus and certainly one that this nation needs to address. I wonder, though, in your opinion, how does each candidate tackle it perhaps differently or more similarly? I can't imagine that the both are going to tackle it exactly the same.
No, absolutely. I think that we're going to see a lot more of a collaborative, perhaps diplomatic, consultative approach from a Biden White House, particularly on the subject of China. I think we've all experienced the Trump's methodology in terms of accelerating or adding to the frictions or the policies that are coming to China. That's often done by executive order or by tweet. And I think there's going to be a massive change in the methodology there. However, I think there are some underpinning, particularly in the financial markets, questions that are outstanding, things that go directly to investor protection, things about how Chinese companies are listed on U.S. exchanges, thinking about how it is that their accounting standards can be similar and we can hold everyone to best practices. So these are some fundamental things for financial markets that are not going to change.
Sherry, you're an investment banker by trade. You've done ambassadorial work for our various jurisdictions. What exactly is going to be the key to getting a deal done that benefits the United States in the best way possible?
If you're talking about China, I think it is a question of how it is that both countries can benefit. I mean, when you're talking about trade, often you're thinking about imports or exports. The reality is that in a globalized world, which we're living in, supply chains are so mixed at the moment that, in fact, we have to think about where the benefits are to both parties. And frankly, actually, one of the things you can't take out of the equation is the financial markets. If you look at Refinitiv data, the actual monies that are raised onshore by Chinese companies are now incredibly robust. It's 5 times the amount that Chinese companies raise on U.S. exchanges. And we're seeing what that impact that has. The anti-IPO, which is destined for the largest fundraising, the largest valuation in history, is looking at Hong Kong and a Shanghai dual listing. Something that perhaps a number of years ago, the destination would naturally be the U.S. So I think that when we're thinking about where a trade deal is going to land, we cannot take out the idea of where the financial markets and access to capital is going to be a part of this.
Shepard Smith here. Thanks for watching CNBC on YouTube.